Ladies and gentlemen, K Kim here. Welcome to the weekend, actually the market update for the weekend analysis. Hope you guys are enjoying this Friday evening. Hope you guys had a good day trading today. We had a little bit of volatile day today. Market was down a little bit and then it kind of popped and then we kind of came back. So something that I talk a lot about in my videos is that, continue to ignore these kind of a micro-term fluctuations. You don't want to, get involved emotionally or get into a dramatic conclusion just because I see that happening quite a bit, especially on social media, just because I can read through comments and things like that. It just, when there's a green day, people are way too excited. When there's a red day, people are way too fearful, right? And if you just look at where the market was in March lows and where we're at today, and I mean, how many red days do you think we've had in the last 7-8 months, right? How many, 2% down gaps do we have in the last 7-8 months? So it is the overall trend that is going to keep you in the market and stick with your longs if you're more of a longer term trader and investor in this market. And a lot of these videos in my videos are actually meant for more of a longer term trader and investor, not really meant for day traders. Though I think my short term analysis that I do on the daily basis, those 65-minute chart, I think it would help for the daily day traders also. But I think it also helps to gauge even those short-term analysis that I do on a daily basis on my 65-minute chart. It also helps to gauge the short-term movement, but ultimately what you want to do is understand the short-term, but then also zoom out and look at the bigger term so you can kind of know where the market is moving as far as a big tide is concerned, right? So that's kind of what we do on these weekend analysis. So let's get into it here. So S&P is currently down today's down about 0.4%, Nasdaq 0.3, Russell 0.5, the banks about 0.9 there. Looks like VIX is still down about 1.7%, gold 0.1%, and the Bitcoin up about 4.3%. So let's actually let's follow up on that 65-minute chart first, and then we'll come back and we'll look at the longer term picture of the indices and some of these tickers here you're seeing on your left. So let's follow up from what we've been talking about here on this 65-minute chart. So just looking at the micro term, we're just talking about what happened the last couple days here. So it looks like we actually saw this gap down, right? So you can see that this is where it closed yesterday, and then we saw that gap down, right? So, and some people have asked me, isn't this a island top reversal? It has certain characteristics, possibly just because we saw a gap up and the next day we saw a gap down. So it does have a certain characteristics of island top reversal, though it is not a textbook island top. Is because if I draw a line like that, because remember, this is where it closed last night, this is where it opened, and the gap is closed because of this wick. If there's no wick, there's no candle like this, and if there was space here like this, right? So then there's a gap up here and there's a gap down and there's no wick here, then there will be a more potent island top and textbook island top reversal. So I can't change. Usually when I see island top, I will make my gap look purple, but it's not an island top, so I'm just gonna keep it as this light blue box there. Nonetheless, we do have this gap down, and you can see we came down pretty hard on the first hour. Second hour we fizzled. Third hour there was an attempt to make a move to the upside, but by that time you can see my short-term moving average was declining, and that acted as resistance there on the fourth hour. So we did see fourth hour another red candle that kind of erased that 3rd hour bounce. And then a 5th hour, fatty spinning top there. And then a 6th hour, looks like we continue lower, breaking below that micro-term support. And then we found support at 366, 367. When I zoom out, you'll know why we found support there. And we did see kind of a fast move. I was watching last 20 minutes or so, and this was pretty volatile. It actually got all the way up like last 10 minutes or 15 minutes or something like that. It was kind of crazy, and it like got up all the way here, and then like last minute it came back down. And so you can looks like this pivot, it was prior support. It has acted as resistance there. So that's kind of where we're at. Technically speaking though, we did close above my short-term moving average. So that gives you just a little bit of an edge. Only if the buyers can continue with this momentum, right? So it'll be very interesting, and it will be important to see how this market opens up on Monday morning. If we see a gap up and can sustain that gap and stay above 369.40, that will set the tone for the day. If you can hold above it for the first 2 hours, again, 369.40 there, gap up or rally right away and stay above 369.40 for the first 2 hours, there's a good chance on Monday we'll see the price getting up here, at least to retest at 371 or even possibly fill this gap. It will be much better for the bulls if you fill these gaps, this one gap, as this down gap, as quickly as possible. The longer you let this gap unfilled, the more hecticness is gonna come for this market, right? So despite the fact that we did see a little bit of a move to the upside, I want to give it neutral in the micro term, not bearish. I would be more bearish in the micro term if the price would have closed below my short-term moving average. You see what I mean? So we did close up slightly above it, and we're just right on this. And there was some kind of a strength there towards the last hour. We did fade it though. So I want to be neutral in the micro term. And let's look at the shorter term here. So in the short term picture, just looking at last, I don't know, several weeks here, you can see we still in the vicinity of higher low, right? So we can see that that low is definitely higher than this low. This low is higher than this low, right? Keep in mind, we have the rising pivot coming all the way from, I'm going to go back and I'm going to zoom out and look at the midterm and you'll see it. But even just looking at this in the short term, this is a support here, here, here. There's where we found support. Also coinciding with the gap area and my midterm moving average just residing in that vicinity, guarding that gap area also. So looking at things more of this picture here, and I look at that, I look at this as more of a short term, right? Just looking at several weeks here, and I'll look at this as higher high, and this is higher lows, right? So in the short term, I want to give benefit of the doubt to the buyers because technically we're still in a uptrend with higher lows and higher highs cultivation, right? Only in the micro term, we're talking just today's price action or last couple of days, we're kind of more of a neutral stance just because we're just been consolidating a little bit. I mean, it's a slightly down day, but just because we're more of a uptrending market in the short term, I'm giving a neutral on the micro term. Let's zoom out. Look at the midterm. So we've been tracking this midterm rising pivot there, right? So you can see right there. And that's what we've been holding. And again, I've been saying this, I'm going to say this again. I do not know when we're going to see this level break, right? And I'm not about to guess it. I'm not about to place a trade just on a guess that this time it's going to be different because you thought it was different here, 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 here. Every single time we did see a bounce. And we did see a little bit of bounce, I mean, on the last hour here, but it's not fully confirmed as that higher low yet. Plus this down gap is going to make things a little hectic there. So You know, we're just kind of right in the juncture. We're right on that gap area, the midterm moving average, the rising pivot. It will be very important how the market behaves in the first couple hours or Monday morning, which I've explained just a little earlier. Let's check out that oscillator real quick. So the oscillator is back down in this vicinity, right? I think it was down more. It's almost like it like disappeared, because I tweeted out earlier, this thing I think did come down, but I think just because that we saw abrupt move, it like I feel like it like disappeared. It's crazy, but we're still in a falling mode, and we're not oversold yet. Just looking at the previous lows though, that's where we found support last time. That's where we found support last time. So we're getting close there. So it looks like when I look at the oscillator, there could be a little bit more downside, but sometimes it could be lagging. This could actually be a lagging indicator. So if we do see a bounce first 2 hours, this will kind of start to cross up. So, but if bears really push it, there is some micro to short term selling pressure looking at this movement here, but we saw something similar here too. That's what it looked like. You see this right here? This is what it looked like. On this day, it looked like it was falling, and then it kind of moved sideways, and then you see how we quickly turned it around. Same thing happened here, right? It looked like, see, on this day, it looked like it was falling, right? That's where it was, and then price moved sideways, and then how quickly the price moved higher. And then, you can see that oscillator got back up later. And it fell more. And that's what we call correcting through time versus price. Because obviously the oscillator has to reset. And it reset it, it came down. But the price stayed sideways. So let's go back to the daily chart here. So we've been also looking at, we're talking now multi-year rising pivot, right? That's resistance there. Resistance here, another resistance. We're slightly above it. So slightly above it doesn't mean a whole lot actually, because market likes to kind of create some whipsawing action. Sometimes it can be a trap, head fake, or all kinds of stuff can happen. So what I would really, pay more attention to more than this rising pivot, though I think that rising pivot will be important. But right now, I think what's more important is this cultivation of higher highs here, and we've been faithfully cultivating these higher lows, right? Not to mention we got that base, we had this base, we got this base, and market likes to, especially the bulls like to operate in this way, make a move, sideways, move, and we did have a pretty decent sideways here, right? And that's been like 2-3 months of base. I believe this was a 10% or a 12%, 10% or 8% correction, right? And this is kind of, sometimes market likes to do something like this where it doesn't come 10% and then 8%. What it does is a 10% first, makes a little bounce, and comes down 8% first. By doing it like that, it's consolidating and it is preserving the level, making sure the market is propped up. But in that same sense, in that process, market really did correct it and kind of digest those gains, because we did see pretty nice move here and digested those gains. And then I think we're in that vicinity where market is ready for another move. But remember, keep in mind, looking at this price action here, right? You look at this here. So if you look at this as a breakout, you see how this wasn't smooth, right? Let's say this is a breakout. See this level right there, right? Do you see that rectangle that I've just drawn there? So you can see there was some up and down, some volatility, right? It wasn't smooth, and usually it never is after it breaks out. Same thing here. That's the neckline, and that's kind of where we're at. It never is, because there's always a tension, right? Before market kind of get into that swift move to the upside, there will be a little bit of tension. There will be a little bit of that uncertainty, right? Some speculation, right? Kind of like, what's this market happening? I think this is a fake breakout. I think this is a trap. Or I think it's going to go higher. So market is going to make sure you keep guessing. And in that process, market could be doing lots of things, right? It could be coming down before going up. It could go up, come down. But what I'm saying is, there's that base, and then there's a little bit of that shakedown there, right? And this is a base here, and we've been in that shakedown, kind of, these subtle like volatility, some up and down movements, just so that because the market wants to continue to make you guess. Like, is this, yeah, we did see a breakout, right? We did see the neckline retest, right? But maybe this is a trap, man. Before this thing coming back down, market is going to make sure you keep guessing. So how I like to look at this market is obviously, we are in an uptrend. So looking at this even long term here, I want to give benefit of the doubt to the buyers. My short-term moving average is right there on my daily chart. My mid-term, my longer terms, they're all rising. They even crossed here back in September. And so I am bullish in this market long term, and you guys know that I'm a longer term trader. I'm a position trader and long term investor. So really, if this thing coming back down 350 is not a big deal for me. Actually, if we do see 350, I'd probably even buy that dip anywhere in that vicinity actually. But so at this point, I'm kind of, as far as the market is concerned, my thought about this market is I think we're going to see a continuation. But this market is great at, creating shenanigans. So I never trying to predict what's going to happen in the short term. But what I'm about is I'm going to react to it. So because I'm still holding many longs since I've been accumulating this year, if this thing continues higher, that is great, because then I'll continue to hold my longs and close out some of them, lock in gain. But let's say if this thing starts pulling back, give you some kind of shenanigan towards the end of this year, because maybe everybody's looking for that Santa rally and markets say, you know what, I'm not going to give it to you this year. And if that happens, I'll just be accumulating more in that vicinity. So I'm kind of like, I don't mind either way, but my overall, posture in this market is bullish, obviously. And I want to continue to stand in that way and continue, ride this market as this market is still in an uptrend, right? Let's go to Nasdaq. So I think, I think right now we're working at this pivot, right? So I think if we can hold this level, make sure there's no shenanigans though. I think if we hold this level, so I drew 2 lines, just make sure, because there could be some fake out, some head fake, some shenanigans. If we hold this level, I think there's still a good chance that this thing go up to 380. If market really decides it's going to go crazy, maybe 400, but I think 380 is pretty doable towards the end of this year. Let's go to Nasdaq. Nasdaq, we've been tracking this rising pivot there. Again, Nasdaq has already done what the S&P is going through. S&P is actually kind of going through in this phase right now. That's where the S&P is. What the Nasdaq has done, Nasdaq has already made a move, right? Again, there's a little bit of that suspense, right? We talked about every time market breaks out a certain level, it loves to have that little shenanigan right there, right? It's not always market is going to give you smooth breakout. It's going to give you just a little bit of up and down, and then later we see that move. But what's important is it came back, retested those levels several times as a new support, and this is a solid pivot now, right? It only can be born as a pivot if it gets retested. It did that 3 times, and market price was never able to break below it, right? And now we're making another higher high, and you can say all day the price is way up too much, the valuations on these tech stocks are crazy, but we have to continue to give benefit of the doubt. You can't be shorting here. And market is great at that because, it's difficult to short here, but at the same time, it's extremely difficult to go long here also. Nasdaq just made about 100% here since the March lows. So it's different. If you're already long and holding is different, right? Versus you trying to go long here now. They're 2 different things, because you're risking way too much if you're trying to go long here now. If you already been long buying these dips, well, you already got gains, so you got a lot of cushion. So if this thing does start to do something crazy, well, then you can able to absorb that, maybe buy more, and as the market continues higher, you may maybe take some off from the table to lock in some of that gain. Maybe if we do pullback. So when you get in at a right price, you have a whole lot of options. But when you don't, and you're trying to do something about it here, should I go long or should I short? Well, that's when things get extremely, extremely difficult. Because I wouldn't go long, I wouldn't go short. I'm not going to try to short here. And I haven't. And it's also extremely difficult to just go downright long here, especially like if you haven't able to accumulate anything, because the market Nasdaq is up. Year to date is 46%. I mean, we've had monster year, right? And usually these indices move what? Like 20%, 25%. Nasdaq is 25, 30 is normal, but you're getting into 40, 50% a year. That's a monster year. Again, not to mention about 100% gain since the March lows, right? I mean, 90%. I think semiconductor did 100% since the March lows, and that's a huge run. So that's kind of where things gets difficult when you try to kind of wait it out, and then kind of, you know, trying to get that quote unquote confirmation. This market never gave any confirmation after this move. We just V-shaped higher, and V-shaped move is the hardest reversal to time things. You know why? Because when the V-shape actually happens, people don't know if that V-shape is actually a V-shape, or is it going to be a low or high, low or low, or is it going to go up and then come back? Is it going to be a bear market rally before this thing get into a new bear market, or is it going to be a little pop before this thing coming down, maybe do a double bottom, or is it going to be pop and then come down, maybe do an inverted head and shoulders, right? So V-shape is very, very difficult reversal for you to have any kind of quote unquote confirmation. You really have to understand the macro to be able to catch these lows here, right? So I want to continue to give benefit of the doubt to the buyers on Nasdaq also. You can see that my short-term moving average, it has been acting as support here and here. When we did get below my short-term moving average, you can see the gap is acting as support there. My mid-term moving average acted as support here and here. And we are faithfully in that higher high trending market on the Nasdaq. So let's go to Russell 2000. Russell 2000 made actually, did you know that since October lows, right? Since just the day before the election, market is up. Russell 2000 is up 30%. Russell 2000 just surpassed S&P 500 on the year-to-date basis. And Russell 2000 was heavily, right, underperforming. Like, it was heavily lagging. It was Russell and the banks. I mean, the numbers were horrendous, right? Like S&P, Nasdaq, they're all near the all-time highs, and the Russell 2000 still struggling -20 or something like that. And you see how quickly they change. Now, I've been talking about this. You guys remember back in June, July, August, September, instead of chasing some of these, you know, indices that are up already, why not work with some of these indices that are lagging, right? And so you can see how when the Russell 2000 was struggling here and just moving sideways here, this would have been a great buying opportunity. Now you don't want to buy, right? You always want to get in before the breakout. But anyway, so this is where I do not know where the top is. I'm not going to try to short it. I'm not going to try to call top, right? I did have some call options in Russell 2000, which I bought here. I actually got locked out on that. And then here did close out all of my call options here. That does not mean, that they really don't mean that, like, man, like this is a top. I just like, well, I had a good gains on those. I'm content with my gains, so I'm out of that. But I have positions in stocks and the small caps, also have an index fund. I got some triple shares and double shares, which I'm going to be holding those. But just on a call options, right? I closed out just because I thought, okay, this thing had a nice move, and this is a, you know, this is a level that 200 was a level, right? I believe I had 200 calls that I bought out of the money options here, and so I'm not saying it's to the top. I'm just saying I've closed out, just locking that gain, and then, you know, if we do see any kind of pullback, I might look to add more, but it has to be a bigger pullback. I talked about it, I think, last weekend. If this thing comes down here, that would be pretty ideal. But this market, just the way this market has been moving, it's just not giving that decline that everyone's looking for. And this market is great at creating an environment that is going to be extremely difficult for a lot of late coming investors and traders to come back in long, because it's not giving you that steep pullback. It's giving you that shallower pullback, and it jumps right back up. So it's making a lot of people very, very uncomfortable chase it, right? And so I don't know if this is gonna come back down here, but we got a full breakout here. I mean, sooner or later market will see a pullback, but it doesn't have to see a pullback. Sometimes market will consolidate for days and weeks and months, right? We've seen something like that in a Russell 2000 before, I think back in 2017. The reason I know that, I don't know if you guys remember, if you've been following my blog back then, right here, right? So we made a big move. You see how all of a sudden Russell 2000 just went straight up, and then this thing just consolidated here, right? For, I don't know, for like months. And you guys remember I was accumulating here, and then I was able to write that and write this. But again, so you see how we saw a big move, and you think a lot of people thought there gotta be at least, hey, this gotta come at least, because that's an obvious level, right? At least gotta come back down here. And that's probably what everybody was looking for, this thing coming back down here. I mean, we saw a big move, it must come down. It never gave you that, right? It never gave you that. That's what everybody's looking at. That's the obvious level for people to be a little bit more comfortable accumulating longs. It never gave that. Instead, it just kind of went sideways, making people more nervous. And you know what it did? It actually got up here. Look, looks like it's going to break down. I remember, because I was long, I remember Twitter was going crazy. Like, oh my God, this thing is, Russell 2000 is ready to crash. This thing to come back down, fill this gap, go to 110 here. We just broke multi-year topping or multi-month topping. That was there. And then that was the low. You see how everybody, that's what I call shenanigan right there. That's a classic shenanigan. That's a classic trap right there, head fake right there, and just went straight up. Because I think a lot of people maybe even trying to short it, thinking that this market is weak. That's why when you face with this kind of move, especially indices, some hyped up stock could see a crash, right? But especially indices that contains like 2,000 stocks, it's not that easy to just start completely crashing down after, you know, it's broken out of this move and in a strong uptrend there. So I want to continue to give benefit of the doubt to the buyers on the Russell 2000. Banks have been consolidating here. You can see that. And also we got that rising pivot we're working with here. You can see resistance, 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 support. That's a legit pivot. And we got this gap here, this gap here. They're both open. We got the high, higher high, higher high. So at this point, either direction is cool with me. This thing goes up here. I think if this market really decided to go, I think there's a good chance that banks could come up here about 30s. Either get to the gap here or fill the gap, or the market says, you know what, you ain't getting your Santa rally this year. This thing will come down, fill the gap, retest that rising pivot. I will be buying that dip if that happens. So right now, we're kind of in that juncture. Everybody's like, okay, well, you know what I mean? It's a psychological kind of battle. Like, well, I don't know. Is that we're going to have the Santa rally this year, or are we not? See, that's not the most important question you should be asking yourself, though, right? That's a question that I do not ask myself. And mainly because I'm already long in this since the March lows, April lows, May lows, June lows. Also because that's just 50-50 guessing. Nobody knows when it comes, is that Santa rally actually going to come or not, right? And I'm talking when I say Santa rally, I'm talking like towards the end of the year, kind of like boom type of move, right? Because we didn't see much of rally in December. Santa rally is actually categorized by looking at the December performance. We are seeing on the Russell for sure, but not a lot of other indices, especially the banks. It's all throughout December we've been consolidating, right? So I think the biggest question is not is it coming or not? The biggest question, what would you do if it doesn't come? What would you do if it does come? Right? My answer is, if it doesn't come, I will be accumulating here. If it does come, I will be closing out, because I do own some call options on XLF and a lot of bank stocks, and also, you know, some double shares and triple shares on financials that I've been accumulating this year, you know, after the COVID. So that's my answer. If it goes up, I'll be closing out. For sure, I'll be closing out my call option somewhere up here. And then if it pulls back, I'll be preparing to buy. That way, you're neutral, right? You're not like fixated in one direction. Because when you're fixated in one direction, you'll be extremely disappointed when something opposite happens. And a lot of times you might have probably experienced, we've all have experienced it. It seems like every time you make a directional prediction, market seems to do completely opposite, right? All right, let's go to the VIX. So VIX, we did see that pop a little bit. You see my short-term moving average here. We popped a little bit, came back down, and we talked about how that's probably what's going to happen here. You know, kind of little pops here and there, but I think in the next year or so, it's going to take time to come down and fill this gap and this gap there. I think it's going to come down, go up, come down, go up. Not that dramatically, maybe come down, go up, come down, go up. It's going to take time to do something like that. Maybe, you know, sometimes you get a maybe bigger pop to retest that midterm moving average. I don't know when that's going to come, maybe sometime next year. If the Sentinel is not coming, maybe. But I never do my overall analysis using volatility index, right? Volatility index should always be a supplement to your main analysis on the indices. Let's go to gold. So gold, we're still in that short-term downtrend with the long-term uptrend, and we're trying to figure out, okay, is that gonna be that, you know, that long-term higher low before this thing actually making new highs? We don't know. I tweeted out this week that last time we saw that pivot there, and then we saw this move where it looks like it's gonna break out, and then market actually coming back down. We're doing exact same thing here, where we cleared this and we're holding up above that, above this level right here. So is it gonna be this trap where this thing comes back down, or is it gonna make a move? Remember what I said about banks? That's not the right question, right? Is it gonna be a trap before lower, or is this a legit breakout, right? That's not the right question, because no one knows. Right question is, what would you do? If it comes down, what would you do? If it goes up, what would you do, right? So that's kind of where we're at. I think some of the yeah, we're still, obviously, we got still lower highs and lower lows. And we have to break that. How does it break? Goes up, cultivate equal highs, pull back, something like that, or goes up, something like this, right? Let's look at the Bitcoin. I'll let you guys go with it. So I did close, not everything. And you guys know how I like to do things here. So let me do a little bit of maintenance on these gaps. So I given you this level last time. First of all, right, that's a rising pivot. That's a rising pivot there. Another rising pivot. Perfect level. Came down. You guys know that I went long here, here, here. And then I closed out total half there near the highs there. And then I bought more, that pullback. And then I rode this all the way, and I given you this level, I'm sure, before this move, and I told you that somewhere there, and there's a next gap here, right? So I did close 1/3 near the highs. So yes, not today, but yesterday, when this thing was actually going near that gap area, right? That's kind of how I closed out this guy, because you guys remember, you know, when I went long here, and then I closed 1/3 here, because there was actually gap here. There was a gap like that, and that's why it was near there. That's why I closed it out 1/3. So same kind of concept there. There's near the gap, and also I got near to my Fibonacci expansions. So I closed out 1/3, and I'm currently holding the remainder. So 1/3 from my total holdings Currently, I closed 1/3 yesterday, and I'm holding that so far. So, you know, when I look at the daily chart real quick, with you guys. Oh, that's not the right here. So this is a daily chart of the Bitcoin, and look at that oscillator. We're actually we crossed here, and so if this thing wants to go, there's a room to move. Except that we did see a little bit of whipsawing action here, looks like. So we may have that resistance right there. So if we break above it on this oscillator, there's a chance that we could make a move to the upside, right? Obviously, this is not a level to chase unless you're day trading. So I'm holding 2/3 now, and then if this thing goes higher, I'll be probably, excuse me, closing out some of it, and maybe another 1/3 or something like that. If this thing goes up and fill this gap, if this thing gaps up, maybe it'll be better just gapping over this gap there. That is, it's all the way from here. You see this right here? So I guess obviously, you know, my trading style, I like to go long here and then buy the dip and go long before the breakout. I never like to chase, and I never do chase after this kind of move. So this is not a level I'm gonna be going long, but I'll be thinking about closing out more if this thing keeps going higher. You might ask me, well, where would you go? Where would you buy again? Well, if this thing starts coming down, it's difficult at this. I mean, if this thing goes up like here and then pull back to maybe 20 or something like that, maybe I would think about it. And it's all depending on a situation. Like I have to look at that pivot level at the time. So it's difficult for me to tell you like which level I'm gonna long. Like even when this thing happened, like when this thing actually pulled back like that, when this thing was going up, when I closed at 1/3, I didn't know which level I was gonna buy. But when actually this thing just came down, then I realized, oh, that's actually a pivot level also. And then I did my Fibonacci analysis here and here. That's also coinciding with my 50%. And so that I decided I was going to buy that dip. So I don't know now, really. I really have to see, when we do see a pullback, in what manner is this market pulling back? In what, you know what I mean? Like, in what way? Then I can analyze, okay, that might be the good level to buy. If not, maybe this is further with the, maybe this thing is topping, because you gotta be careful with the Bitcoin, because Bitcoin can get pretty hyped up and you can get big corrections. And I remember there's a lot of documentaries and stuff that were made that a lot of people lost a lot of money trying to chase this, trying to buy these dips here. And when this thing came down, a lot of people lost a lot of money. So you gotta be careful with the stocks like, or this kind of asset class where it gets hyped up and crashes back down. It's exciting, but this isn't something that, you know what I mean, you want to risk too much of your capital in these kind of trades. This will be more of a shorter term trade. You guys enjoy your evening and enjoy your weekend. Good luck trading next week. All right, guys, I've decided that I was going to start promotion for the month of December. And this is going to be, if you've been thinking about joining my Traders Club here, I am running this promotion until end of this month, which is end of December. So until the New Year's Eve, the 31st of December evening. So, as you guys know, and if you've been thinking about it, joining the Traders Club, I don't run promotion usually once a year. I do, and so this year, for the last month of this year of 2020, I'm running the investors membership, the yearly plan. So you would have to sign up for the investor membership to take advantage of this promotion. And so, a lot of people ask me, what's the difference between, just some of the things you talk about on Twitter and the, what you share on the, on your YouTube videos. Well, obviously, as you guys know, here's the plan there. As you guys know that, the daily update videos that you watch on a daily basis is looking at actually very, very short term of this market, just kind of forecasting what's going to happen this week, maybe next couple of days and things like that. On the daily, I do give you, on the weekend update videos, the weekend analysis videos, I do give you a little bit more comprehensive recap, giving you the longer term outlook, but it's nothing. And I'm not exaggerating things, but it is nothing like what you could find in the member videos. So obviously I got 3 plans here, but currently I'm only running the promotion for investor membership alone. And you would have to do the yearly, which, when you go back here to sign up, here, if you click on there, you'll get to that payment page, all of that. So, and it will get to that yearly pricing. I'll get to it. So basically, regular price is $4.90 a month for investor, and it's $39.90, right? $39.90 for a yearly. And with the promotion that I'm running until end of this month, end of this year, right? We got about remainder of this year, and you got some time to think about it, right? You don't have to make hasty decisions or anything like that. Think about it. If this is something you think it will be helpful in your own analysis, in your own navigation of this market, you can take advantage of this. So what I do for my members is that obviously they would have a full access to all of my long-term stock picks, right? So, and you hear me talk about this kind of stuff. I mention things, my recent trades, some of the positions that I hold, and I talk about it. I mean, you guys, if you go back to some of the videos back in like April lows and May lows, you guys remember me talking about, I like Google here, I like Apple here. You guys know that I was buying Bitcoin. All of those entries, exits, and add points, you get all of that picks and updates right here, right? Entry, add, and updates you receive as investor member. So, and these are not just like stock picks for the sake of stock picks, right? Like I'm picking stocks here and there. No, actually these are the stocks that I'm actually getting into. I will not share any tickers if I myself is not involved in it. So if you can think about like basically if I'm gonna get into this stock, for me to be investing on this stock or position trade, then my member is gonna hear about it and get updates on it ongoing basis, right? So, and I know that a lot of members that I currently have, almost all of them come from day trading, comes from like swing trading, come from overnighting, scalping, you know what I mean, here, in and out kind of thing. And as they watch my videos, they realize they want to be more long term. So they don't have to be so occupied with the market. They want to look at things longer term. To able to do that, right? You really have to have a good analysis, macro trend analysis, right? This is something that I do with my members. If not a weekly basis, you would have these updates on this throughout the week, throughout the days. And also there will be special report videos where I will cover, we're talking macro, where the market is going next 10 years, right? I actually done just this recently, this new video for my members, right? S&P 500 destination, 16,000. And if you look at the number now, you're like, what? That doesn't, and if you watch my video, and this is about an hour, maybe hour and a half video, and there's a video like this in my special report video. There are videos like this, like 6 of them, going all the way back to 2016. And I can stand on my 2016 analysis that I've done back in 2016 lows. I'm talking when Spider was trading at 180. We're talking S&P at 1800, right? We're sitting right now 3700, 370 on Spider, right? And I can still stand on that today because we understood the macro sense of this market. That's why we stood strong even after the COVID decline. And I've done a video for you guys here. If you go watch this right here, March 21st, this is a free video that I've done for my YouTube followers and my Twitter, my social media followers. And obviously, member video will be much condensed and much more, you know what I mean, comprehensive and covering more areas. And there will be more videos like this on a special report section. And there will be more videos ongoing, giving you guys an updates where the macro sense, because things can change, obviously, right? And so that's kind of that's how we've been navigating this market since 2016 lows, when Spider was at 180, right? Now Spider trading at around 370. This means Spiders could be at 1600, right? And I go over this with my members, and we talk about these kind of things while everybody is so concerned about these short-term fluctuations, always getting scared, right? So that's something that I always tell my members is that if you fully grasp on where the market is in a macro trend perspective, you won't be scared when there is these kind of fluctuations, volatility, because that's market, man. I mean, you cannot have this market without volatilities. That's just given, right? That's just part of this market, and people always trying to avoid it. That's the biggest problem. When you're trying to avoid volatilities, is when you're gonna miss out big runs, and that's, you know exactly what I'm talking about. And if you're, also if you have like a larger fund, you're working with a big capital, we're talking about $1 million or more, definitely you want to put a lot of that percentage of your portfolio into index fund, and then have some other portion get into some position trading, long term. You kind of want to have a good, well diversified portfolio, especially if you have a larger account. And this is where it comes handy here. I also go through my index fund investing guidance, guiding through which indices to get in and how much, which levels. And that's something that I go through every member plus or member semi-monthly report. So as investor members, you will get your semi-monthly report. And in those videos, I go through all of my current holdings, give you guys a review on it and updates, including my index fund positions, right? Keep in mind, again, for my members, every single tickers that I go through, every single one of them I am involved in, right? I don't just pick stocks and just tell you guys about it that I think it's a good buy and I myself don't have it. That way, you will continuously get updates on this, right? So my job as your instructor here at Traders Club is telling you where the market is going in the big picture, right? In the long-term picture, and also intermediate term, right? Short term, we cover this on my free videos on our daily updates, and even on the week, and those free videos that I do for you guys on YouTube videos. But with my members, I focus on the long term, and then how we should be positioning ourselves, right? And along the way, you will get your updates on, I'm holding Google, I'm holding FedEx, I'm holding Alibaba, I'm holding Apple. Okay, what should I do? When should I close some? When should I buy? Which level I'm going to be buying more? Which level am I going to be closing it out or closing partial position? Things like that. So, right, that's what I'm saying here, a case holdings review, right? So macro trend analysis. And we have a video lesson library. And if you're really you really like this technical analysis stuff, you like analyzing things, you want to learn more about how I approach this market, there's tons of videos for members in a video lesson library. There must be, I don't know how many, 50 videos, some of them are like hour and a half, 2 hours videos, showing you all the way from like how to properly set up your charts. How do you look at bullish divergence? How to look at your indicators? All of that. And some of you guys even wondering, what about those chart setups, okay? What about your configurations? I have those disclosed in my member area. If you want to get really techie with that, like if that's your thing, like you want to learn all this, you want to learn how to use this indicators, how to look at the market, all of that, you have that in my video lesson library. If not, you can just, you can use this membership to help in your own analysis and navigate this market, right? Obviously, the market guidance, right? I've done guidance for you guys here back in COVID-19. This was chart, right? Near the March lows right here. Something like this. There's analysis, a lot of analysis that I've done for my members back in March lows, April, May, June, where to buy, what to buy, right? And I've done something similar here, March 21st, right? March 27, right? We're talking about generation, maybe even lifetime buying opportunity. March 27, right? Major support, potentially bullish reversal. April 3rd, important inflection point. April 11, constructive follow through. April 19, okay, we might have the lows that put in. And we're talking when the S&P and the SPY was trading at 220, 230, 240, 250, 260s. Now trading 370s. This is when, when the mainstream media were lying to you, TV quote-unquote experts were lying to you, right? Everyone out there were lying to you that this is a bear market rally, right? This is not going to end well. Well, guess what? 3-5 months later, we're at all-time highs. And guess what? Semiconductor Nasdaq performed 80 and 90% since the March lows, 50% year to date. Majority of people were not able to forecast this. Do you know why? Biggest problem is this: macro analysis and forecast. We never were in a secular bear market. We're always in a secular. This is something we understood here at the Traders Club even after the COVID decline. I think Wall Street Journal came out, said something like middle of March that bull market is dead, or bull market ends, or bear market starts. You guys remember that article, right? Wall Street Journal or something, some other major publication, very, very popular, right? Bull market ends or bear market starting or something like that, right? No. We are never in a secular bear market. And all of this I explain in my videos, in my special report videos, so you understand. Are we in a macro secular bull market or secular bear market? Because in a secular bull market, you get those fast recoveries. In a secular bear market, you don't. And you gotta understand. You gotta able to distinct the two, right? Differentiate it, so you can able to adjust your portfolio accordingly. March lows, April lows have been my biggest buying opportunities, right? I'm actually thankful for March lows and April lows that happened with the COVID decline. So obviously I do offer other plans here, other memberships, and those are for option trading, other things. But for if you're looking to kind of understand these things long term and want to learn how to position trade and long term invest in this market because you're tired of getting in and out, getting stopped out. You look at your account last couple of years, really haven't gained anything. Where is the market? Again, market was 180 in 2016 lows. We're close to 400 to like this year, right? And because when you're in and out, a lot of times what happens is you miss out on a big moves. And then when you see a big COVID decline like that, a lot of people get scared. They trying to short, market goes right back up, and this is where people try and short, or trying to time it the next leg down, thinking this is going to disturb a bear market, and they completely miss out and lose money and miss out that run. And I call that double loss, because you lost money shorting and you lost the opportunity. So there's opportunity cost, missed opportunity cost, and you lost money shorting. So actually that's a double loss, right? So anyhow, so that's the membership there with the investor membership that I'm running right now. So feel free to go. I'll put the link below, description below, so you can check it out and go through. You can go through these things that I've presented to you. There's a performance here. There's a brokerage statement here for 2020. These are my win rates you can see I got pretty high win rate, right? Because I do not get into a position in and out, in and out, in and out. That does not mean I get into a position that goes straight up right away. That is not what this is mean, right? What this means is, let's say I entered long, maybe this thing did this or this did that, but because I do not let this market get to me or trap me, all right? I don't want to fall into a victim of some kind of a shenanigans or head fake. Let's say I got into it here. I might add here. And you guys saw how I trade my Bitcoin trades. You guys remember that? Something like that. And then when I start getting it out, those are winning trades. Instead of getting stopped out here, getting stopped out here, getting stopped out here, getting stopped out here. You know what? I'm sick and tired of this stuff. I'm going to throw this ticker away. Month later, you come back, that ticker is like 30, 40, 50% higher. You guys know what I'm talking about. And that's the reason why I think I've been having really good win rates in the last 4 years. And last 4 years wasn't such a greatest market condition either. Because we've seen like market goes up, 2017 we tanked 12%, market got up, 2018 we tanked like 20-25%, and then market got up and there was a COVID decline. So market was actually pretty volatile in the last several years. It was actually difficult seasons that we actually went through in the last 3 years. And I actually think, and that actually helps this market in the next 3 to 5 years have a good years, because we had such a kind of a volatile years last 3 years or so. So you can go through these and click on here, right? Join, right? Again, you have to sign up for the investor yearly plan to qualify for this special promotion here that I'm going to be running on the end of this month. Again, the last day will be December 31st, evening time. Click on here. So you'll come to this page, right? And then, carefully go read through those. Make sure to fill out all the required fields and click on here, sign here. And then this is where you're gonna click on that, and it's gonna get to your PayPal account to put all your payment information, right? So hopefully, if you do sign up, I'm looking forward to trade and invest and navigate this market with you. If not, it is totally cool. Continue follow me and on Twitter and StockTwiz and YouTube. And you can continue to follow me that way and follow my work. But thank you for listening to this presentation.